Welcome back to another Explainer. Today, we're diving into a story that honestly reads like a high-stakes geopolitical thriller, but it's actually the absolute bedrock of our global economy. We are talking about the rise, the reign, and the potential reckoning of the United States dollar. You see, for decades, the dollar hasn't just been America's money, it's been the world's money. Oil is priced in it, global trade completely depends on it, and central banks across the globe hoard it in their vaults. When financial crises strike, investors don't run away from the dollar, they literally rush toward it. But the plot is thickening, and the global financial order might be shifting right beneath our feet.
Okay, let's dive into this. Here's our roadmap. First, how the dollar became king. Then we'll uncover the dollar's hidden superpower and examine the cracks in the crown. After that, we'll meet the challengers. And finally, we'll explore what a world without the dollar actually looks like.
But before we rewind the clock, I've got to start with a real-time mystery that's unfolding right now. Why are governments around the world suddenly buying record amounts of gold? And why are we seeing these entirely new alternative payment systems popping up? Well, it's because that unshakable historic faith in the dollar. It kind of looks like it might be shifting. Countries are actively hunting for alternatives. And to understand why this is such a massive deal for global finance, we first need to figure out exactly how we got here. Section 1. How the dollar became king, from the pound to Bretton Woods.
You know, the dollar wasn't always the center of the financial universe. Way back before the 20th century, if you were doing international trade, London was your financial capital, and the British pound was the undisputed king. But then, two totally devastating world wars completely redrew the global map. Europe emerged from those conflicts heavily indebted and economically weakened. The United States, on the other hand, emerged as the largest industrial economy on Earth. Recognizing this massive shift in power, in 1944, representatives from 44 different countries got together in New Hampshire to design a brand new monetary system. And this became the famous Bretton Woods Agreement. At Bretton Woods, they basically created a system where global currencies would be directly linked to the US dollar, and the dollar itself would be backed by gold. So the crucial point here is 1 ounce of gold was fixed at exactly $35. This incredibly specific number anchored the trust of the entire modern global economy. It gave nations absolute confidence that their dollars could always, without fail, be exchanged for something of tangible, real-world value.
Now, here's the wild part. This gold backing didn't actually last forever. Fast forward to 1971, and the US abandoned the gold standard entirely. Now, you'd think that would be the end of the dollar's reign, right? Actually, no. The dollar remained totally dominant. Why? Because global trust simply shifted directly to the fiat currency itself. People didn't need the physical gold anymore. They just believed in the sheer strength of the American economy, its political stability, and its incredibly deep financial markets. Trust literally became the new gold.
Which leads us perfectly into Section 2, the dollar's hidden superpower, deep markets and global liquidity.
To understand why the dollar is so incredibly hard to dethrone today, we have to look at the invisible moat protecting its empire. The dollar holds some seriously undisputed objective advantages. First off, the United States simply has the deepest, most liquid financial markets in the world. If global investors want to buy or sell government bonds, stocks, or really any other assets quickly and easily, this is where they go. Second, American Treasury bonds are almost universally viewed as the safest investments available on the planet. And third, it's the absolute default currency for global oil, natural gas, and commodity trade. Companies from completely different nations choose the dollar just because everyone else already accepts it.
And this brilliantly illustrates a massive network effect. Think of global currency kind of like a deeply entrenched social network. Even if a country wants to log off and leave, the switching costs are just astronomical. Businesses would need entirely new contracts. Banks would have to completely overhaul their financial plumbing. Governments would need to rebuild their reserves from scratch. For most of the world, sticking with the dollar is just the path of least resistance.
But as we know, no empire lasts forever without facing some internal and external pressures. Let's move to Section 3, cracks in the crown, debt, inflation, and geopolitics.
We need to look impartially at the objective market forces that are threatening this historic monopoly right now. There are really 3 primary vulnerabilities experts are keeping a close eye on. First, the historic U.S. national debt. The government spends far more money than it collects, and endless deficits naturally lead folks to worry about the long-term confidence in the currency. Second is rising inflation, which naturally makes global investors pretty anxious about the dollar's long-term purchasing power. But the third point is perhaps the most immediate external catalyst, geopolitics.
The US has frequently used the dollar to impose economic sanctions. And, regardless of the reasons, as a matter of objective fact, this has made several countries pretty uncomfortable relying on a currency controlled by a foreign government. Sanctions have actively pushed nations like China and Russia to bypass the dollar and experiment with local currency trade agreements.
And that brings us right back to that mystery from the very beginning of our explainer. Why is everyone buying up gold? Well, consider this incredibly stark reality. Gold cannot be printed, and gold cannot be sanctioned. This is exactly why central banks are hoarding large quantities of precious metals right now. In a world of mounting deficits and high geopolitical tension, gold has historically served as an independent, secure store of value when things get uncertain.
Let's move along and see how this builds into Section 4. Meet the challengers, the euro, the yuan, and crypto.
If the dollar stumbles, who's actually waiting in the wings to take the throne? Every challenger has a unique advantage, for sure, but they also have a potentially fatal catch. Take the euro. The advantage? It represents a massive economy, and it's already widely used. The catch, though, is a political division among European nations, which makes global investors a bit cautious. Next up is China's yuan. The clear advantage here is China's absolute dominance in global manufacturing and supply chains. But the catch is substantial. A lot of investors hesitate to fully trust a currency that remains so tightly controlled that its government. Finally, there's crypto and central bank digital currencies. The advantage? Totally decentralized transactions without traditional banks getting in the way. The catch? Extreme price volatility. So right now, none of these alternatives offer the exact perfect combination of liquidity, stability, and trust that the dollar provides.
Section 5. A world without the dollar. What a weaker dollar actually means for you.
So, what does all this macroeconomic theory actually mean for your daily life? Well, when a reserve currency weakens, it directly impacts your wallet. Here are the consequences. Imported products here in the United States could become noticeably more expensive. Borrowing costs might rise, meaning mortgages and car loans get pricier, and interest rates could stay elevated for much longer periods. Even the American government could face higher expenses when servicing its debt. But, just to be completely objective here, there is a silver lining. A weaker dollar actually makes U.S. exports significantly cheaper. American goods would suddenly appear way more affordable to foreign buyers, which makes domestic industries much more competitive overseas. It's a really complex balancing act.
All of this brings us to one final, critical question to leave you with. Are we entering an era with no dominant currency at all? You see, history shows us that financial empires, like the British pound, they rarely just disappear overnight. They decline gradually. The dollar definitely still holds incredible advantages: trust, established institutions, and the deepest capital markets on Earth. But mounting debt, rapid technological change, and shifting geopolitical tensions are slowly reshaping the board. So the real question isn't whether one single rival is going to win, but whether the future holds a fragmented, multipolar financial system where nations just diversify their reserves. Only time will reveal if the dollar remains the undisputed king of money or if it becomes just one powerful currency among many. Thank you so much for joining me on this explainer. Keep questioning, keep learning, and I'll catch you next time.